it's been a big year for the Canadian stock market with already a double-digit percentage advance. And obviously, as we head into the fall, a lot of people are going to be wondering where the tailwinds for the market could land. Let's talk broadly speaking about the mood of the markets with Mike Vinokur. He's portfolio manager at Propellus Wealth Partners at IA Private Wealth. It's nice to see you.
Likewise.
We were having an earlier conversation about the U.S. stock market, which obviously you have to track very closely and invest in. But for the Canadian stock market, it's been interesting to watch the strong demand for some of our sectors while everybody is talking so much about tech this year. How do you feel about the run-up that we've seen so far in 2025?
Well, I think you have to put it into context, right? The Canadian market was a laggard as compared to the U.S. market for so many years. In fact, if you go back historically speaking, the TSX is not the best gauge of an equity market over long-term performance. It's done fine, but it's done nowhere close to the U.S. tech sector or U.S. S&P 500 broadly speaking. However, in certain periods of time, you will see outperformance, especially when, the U.S. tech market or the U.S. stock market's getting a little frothier and people come back to the value trade where you've got the golds, the mining stocks, the telcos, the financials, the companies that are really not that expensive, pay a nice dividend and are seen as sturdy.
Yeah, and certainly gold is, the conversation around gold, I can't remember it ever being this robust and really giving some of those Canadian players some muscle. But I guess I want to lean into what you're talking about because we've got a number of sectors that if people feel they need to look beyond tech, there's a lot of areas that are worth watching. Financials, just as an example, like we're on the doorstep of bank earnings season in Canada, so we'll see how the Canadian players are doing. But when you look at, because we talk about tech valuations, we look at financial valuations, and you can talk about the U.S. too. What's your general assessment of the opportunity there?
So we like the financial sector primarily because, A, it's not overvalued. Now, let's be clear. It's not crazy cheap either because we're still worried about the credit cycle, right? We don't think it's necessarily over. However, the big financials, both sides of the border, their balance sheets are quite robust. I mean, they can take on quite a bit of credit provisioning and still keep chugging along. You've seen that in the US, you've seen it in Canada. We think this earnings season isn't going to be any different. But what we're getting a little bit excited about is, and we don't hear much talk about this, is how AI is going to be able to help these old stodgy industries like the financials in terms of efficiency, productivity, cost cutting. If you think about the different levels of departments within financial companies that they could probably increase efficiency on, you could probably see, without an uptick in revenue, a reasonably good uptick in earnings based on implementation of a lot of these new technologies we're seeing coming out.
I think you're right. That could be one of the biggest stories of the next at least 5 to 10 years is how broader businesses implement AI. Because if they do it poorly, it probably won't be great.
Right.
But if they can do it well, when there's already pressure to follow the lead of, like you got Shopify saying, if the AI, if the person can't do better than the AI, then we're AI first, and that's putting a lot of pressure on other industries to figure it out, including financials. You always sort of give us different investing ideas. One company that you flag for our producers is Jackson Financial. This is not a bank, and it's also not a Canadian company.
That's right.
But it is a name that you see some value in. Tell us a little bit more about this one.
Yeah, so Jackson Financial is a life insurance company, and they sell annuities and they sell retirement products and all kinds of other financial services. It was a spin-off, I believe, from Prudential quite a few years ago. The stock has done extremely well, but we like management there. They've been growing book value per share quite robustly. It trades extremely cheaply. It's got a bulletproof balance sheet in our minds, loads of excess capital, tons of excess cash to buy back stock, buying back stock at about 45%, 40% discount to book value is extremely accretive. You have a very nice dividend yield, I think is in the 3.5%, 4% range. So this is the kind of idea where you don't have to have a lot of things work for you, in our view, in order to make a reasonable return between the dividend yield, the stock buyback capacity, and just PE normalization to sector, let alone the market.
Okay, great perspective on that one. Let's talk about energy.
Sure.
It's already come up a few times on the program today. It's the lagging sector in Canada this year. It's probably one of the most talked about sectors on BNN Bloomberg. You got a lot of companies that are interested in running some, no pun intended, well-oiled machines.
Right.
But ultimately, we have seen that lag in performance. So are there examples of stocks that you like in the energy sector that you feel confident around?
Yeah, so we own quite a few different oil and gas producers, and they all have, I would say, a few things in common. Okay. One, their balance sheets are really, really in great shape. They all pay dividends, and most of them have been increasing their dividends. They've all got major stock buyback programs and great capital allocation, and they all have reasonably long life reserves with well-placed geographic assets in the ground. We think that right now, the big missing link in the energy space is not the fact that, our call is that oil prices are going to go up, though we could all be surprised by whatever geopolitical or other events. But that's not the thesis that we require. These prices for the companies that we own are enough to have them keep chugging along, keep paying their dividends, keep buying back stock and accreting value based on today's price. Because the one thing that we think the oil patch has really learned from the boom-bust years of the last 30, 40 years is get your balance sheet in order and don't overextend yourself, so that when oil and gas prices do compress a little bit, you're not concerned and you're not worried about banks or other financials extending you credit.
Okay, and just to give our audience a little bit more context on that, names like Whitecap, Cenovus, Suncor, Peyto, these are all names that get a check mark for you?
These are all names we own. These are all names we like. We think that the sentiment in the oil patch is very low, and we think there's a great opportunity. Now, I'm just going to caveat that by the technical side of things and seasonality and bring that back into the picture to say that, generally speaking, the oil and gas sector does well between December and May. So we're now in a usual seasonal period of weakness, so you don't have to rush in. But these are names that we like and that you can accumulate slowly over the next probably 2 to 4 months.
We're almost out of time. I do want to talk about a stock in industrials. People have talked about industrials, the big Canadian build out as an exciting one, infrastructure, all that kind of stuff. Russell Metals, a connection to steel. Everyone's like, what's going on with steel, tariffs, all that kind of stuff. But you saw an opportunity there. How come?
Yeah. So first of all, management. Management is key. We think management has done a fantastic job. They have been doing tuck-in acquisitions. They've really expanded their U.S. footprint to the point where now tariffs are not really affecting them all that much because they can service their clients in the U.S. from the U.S. side and clients in Canada from the Canadian side. They have a really great balance sheet, pays a 4+% dividend. They've got very little net debt. And you talk about the build out in Canada. Let's talk about the build out in the U.S. with, the Trump.
Build everywhere.
Build everywhere, right? So that's going to require more steel, more metals, et cetera.
All right. Mike, good to get your perspective. Thanks very much for sharing some ideas. As always, Mike Vinokur joining us here in studio.